Hey everybody, this is the Bitcoin Beast talking at you again. I'd like you to welcome to my channel. This is the second video of my video series about trading, and this one is entitled The Pullback. The pullback is very common in the it is probably the most famous and the most well-known of all the different entries in any type of trading that you're doing. And there's a lot of different ways to find pullbacks, but I'm going to talk about one today that's very common. I'm going to take the mystery out of it because it sounds really scary, but it's really not. When I take a look at it and look down into its deep essence and in simplified terms, it's very easy. It's called the Fibonacci retracement. In finance, Fibonacci retracement is a method of technical analysis for determining support and resistance levels. It is named after the Fibonacci sequence of numbers whose ratios provide price levels to which markets tend to retrace a portion of a move before a trend continues in the original direction. Okay, and I just call them pullbacks. We keep it very simple, very basic. There's no need to come up with all these complicated terms and stuff. So let's go to the chart and I'll show you what I mean. Pullback. Look for a pullback. Pullback. There was a lot of good trades here this morning. So what we're going to do here, we had a trade here. I missed this one. This was a fade that we talked about in the last video. This was another fade. This is a really nice one. That went all the way up. You could have held that all the way to the opposite side, and then did a stop and reverse. Because I did take this trade this morning, but I didn't take this one. I wasn't near my computer. But this whole move right here, there's pullbacks in this move. That's what these red candles are. All these red candles. So let's expand this out a little bit so we can get a little bit better view, so you can get a kind of a better perspective on what a pullback actually is. Now, a lot of people, they'll use moving averages. I use a combination of either Heikin-Aishi candles. I like Heikin-Aishi candles. It makes pullbacks come out very clear, and you'll be able to see very clearly where the pullbacks show up. See, here's some pullback. These are a little bit more. These are more advanced. Let's go for this. Is a nice pullback right here. This is a good pullback right here. It failed, but it was still. Yeah, this one kind of failed. Let me see if I can find another one. We'll look for another one. Oh, that was during the day. That's why. What the heck? What's going on here? Okay, there we go. I want to get, where am I? 5 minutes? It was 5 minute candles. Sorry about that. We'll get to speed it up. Oh, well, actually, that one trade didn't have a pullback in it. This was that trade right there. There wasn't a single pullback in there through Heikin-Aishi. Interesting. But okay, so let's try a different method. There wasn't a lot of volatility during this session. It was still early morning, that's why. So let's take the Heikin-Aishi off, go back to regular candles, and we'll use standard deviations because you can use those as well. It's another way to look at it. Standard deviation. It's the 5 minute chart of the E-mini NASDAQ micros, and let's go right here. We were in our trade, we stuck in it, and then we get this pullback. Here's a nice one right here. Now, these are pretty deep pullbacks. So let's go one where there's a standard deviation where you can get a higher rate of return. Here's a good one right here. This was after I didn't take this trade, but I exited here, but I could have done a stop and reverse on this trade. So what happened is I get up to my third standard deviation, and then I drop back down to the first. That's a good entry point. Also, when you get to your first standard deviation, or your second standard deviation, drop back to the first. That's also a good one. But basically, anytime you get a pullback, you can go. So let's say we got in a little bit early. So we seen this run up, got up to the third. We already took that. We took that trade. We went down. We got out here at our 50% level. Now we want to take this standard deviation here, this first. It's a good probability you're going to hit that trade. Now, not as good as others. Your stop is going to be down by your VWAP. That's where your stop is. That's an absolute disaster stop. You always want to trade with a stop. And so it went up, went down, we almost hit our stop, but didn't quite. Then we got back up, all the way up into fourth standard deviation. So we put our take profit. Usually I do a 65, 70%. We're about 30% above this level here. And if we take our Fibonacci tool, where's Fibonacci? I'm new to this particular. Where's Fibonacci? Is that Fibonacci? Here, Fib retracement. There we go. And we go, let's say from here. Dang it. Why aren't you going? Sorry, I usually don't use these, but I just wanted to give it as an example. We want the fib. Where's it at? Now where'd it go? I want the retracement. Resistance. I think I had too much coffee. My eyes are bouncing all over the place. Why am I not seeing? Let me look again. Oh, here it is. So we went down here, and we go to our point into our third standard deviation. So we start looking at these levels. Now, didn't quite get to, they like to call this level the golden pocket. I think that's a little deep. I consider that more of what we get into the next trade, which is called a bounce. I want to see a continuation trade. And usually these go in somewhere between the 23 and the half. Those are what I call continuation trades. So we want to get somewhere in here, ideally about 30, 38.2. But I eyeball it, because if you look at these numbers, if you just kind of round them a little bit, this is a quarter of the way down. This is a third of the way down. Here's a half of the way down. Here's 2/3 of the way down. Here's 3/4 of the way down. Very simple, very easy way to look at it. You don't have to memorize these numbers. Just if you know your quarters and halves. I know if you're American or English, that's very easy for you. Maybe if you're more on the metric system, it might be a little bit more difficult. But if you're American or English, a quarter is, a quarter of the way from here down. Yeah, that's about a quarter of the way. You look at it. Yeah, that's about a quarter. So that's where we would want to look, somewhere in this area, between the quarter and the half. The 2/3 of the area, that's pretty deep for a pullback. Would have been good in this case. It would have gone right up. I like my pullbacks a little bit more, but because this was kind of choppy, maybe a deeper pullback is a little bit more warranted. Maybe the 1/3 pullback is a little bit more warranted in this case. Did drop into just above the golden pocket. So we did get a little bit of a drawdown, then boom, right back up. Because this is choppy, I would have been, if this had more of a steep incline, this is let's go ahead and remove this. I want to show you another thing called the Gann fan. I don't use it either. You can use a moving average as well, but it's just basically, it looks at the slopes. I don't just go away. Come on, go away, remove. Where's the Gann stuff? Does this one have it? Let me see. Maybe here. Elliott cycles, no. Give me a second. Gann squares. See, the Ganns are, let's see, these are more complicated Ganns. Yeah, Gann fan, that's the one I want. So we look here. This kind of gives us how steep it is. And that's all I'm looking for. And so the Gann fan is just a really complicated way of seeing how steep the trend is. Is it going way up really fast, really hard? So if the trend's going up pretty fast, your pullbacks are going to be shallower. You got the slopes here. You got the slopes in here, 1/8, 1/3, whatever like that. But basically, I don't worry too much about being precise. I worry more about, because you got to think fast. You don't have time to put all these crazy tools on. So basically what we're looking for is the slope of the trend. That is more important than the trend itself. If the slope is high, then the pullbacks are going to be shallower. So you're going to be down in that quarter to a third range. If the slope is low, like in this one, the slope is kind of low, then you're going to look for a deeper retraces, maybe down close to the 50% level. So there's many different ways to measure it. The Gann fan, I just eyeball it. Another way to measure the slopes is, remove this, just kind of eyeballing the lines, kind of, take a segment here. I'm not going to draw it because it's just a pain in the butt to draw it, but you just draw a line and see what kind of slope. Is it gradual, gently up? Gradual, gently up? Yeah, it's just gradually and gently up. So the retraces are deeper. You're getting that 50% level. You're right there around that 50% level. If these were more up like this, your retraces are maybe only 1 or 2 candles deep, and they're only going to go to that 25 to 30% level. And let me see. Let me go ahead and get a moving average on there. That's another way to tell, is just using just a basic moving average. We already discussed VWAP, which is a type of moving average, but which is specialized to give you a reference for the day. This one is more give you a reference, and you can use a simple, you can use an exponential. There's not that much difference. There's all kinds of crazy ones. There's hulls, there's all kinds of things. Particularly with slopes, you want a slower moving average just to try to get a general guide of how fast and the trend is moving upward or downward is in the case. And as I said, the shallower the trend, the deeper the retraces will be. And at the same time, that also means that the probability also goes down, the shallower the slope. So we want to go with the inputs. You want a particularly high one. I like 21 is one of my better. It's actually it's not too fast, not too slow. It kind of gives you, see, you got a nice gently upward sloping trend going on. And so people like to put a lot of moving averages on here, and then they'll say it bounced off the 9. It's gonna bounce off the 3. That's just Jesus toast. You're just looking at Jesus toast, in my opinion. You throw enough spaghetti on the wall, something's going to stick. So, but if you just use that rule of the more shallow the slope, the more deeper the retrace, and the more steep the slope, the shallower the retrace. So, if it's got a real steep slope, then it's going to retrace in that 23 to 1/4 to 1/3. And if it's shallow, you're going to hit close to that 50% level. And that is the pullback in a nutshell. So what you would do is you would wait. This one's a 50%er, so we'll look at this move here. Let's say like each retrace is its own entity. So we're going to look between here and here at each segment, and we're going to look for a greater than 50% pullback. So we pull back 50%, we'd enter here, put our stop at the prior low. Okay, because then we're wrong. If we're wrong, we're wrong. It happens. This is a lower probability trade than the fade, but it's still a good probability setup. And like I said, the more shallow the slope is, the lower the probability the trade's going to work out in your favor. So it didn't hit the stop and went up, hit our next target, went all the way up to this 3rd standard deviation. I definitely would have cut it off by then. I probably would have cut it off here at the high or 7. We're just looking for pieces of the trend, base hits. We're not looking for home runs. We're not going to hold this thing forever. We're not in love with it. We're not going to marry the trade. We're here to get base hits. And that's what scalping's all about. We want to be out, and there'll be another trade right around the corner if once you understand what you're looking for. And like I said, this is a lower probability trade. This is probably closer to 65% probability. So 6 out of 10 times you're going to hit. So that you want to be a little bit more careful. If this is a little bit more steeper, then you're getting up into the 70%. So that is the pullback in a nutshell. I don't know if we have, I don't think I have a downward one to show you in this. Nope, I do not have a downward one. So no downward one. Oh, this is today's session. That's why I was confused. That's why I got so confused. That was today's session. Let's see if I can find a downward pullback. I don't think there was really not much of one. Nope. Not a really big one. There's a little one here. You had a pretty shallow, then you had a retrace here. Probably got to the 25. Got the quarter. Pretty close. Probably would have missed that one. I probably would have had my, back here closer to the 1/3 pullback, and that would have kept on going. So I would have probably missed that one. But that's an example of a downward move where you got just it's 5-minute candles. You got 5 minutes to get in. Like I said, I would have pulled it 25%, maybe 1/3. Probably wouldn't have got in on that one, but that's okay. It's better to be out of a good trade than in a bad one. That's still a win. So I hope that helps. This is the pullback. This is the Bitcoin Beast. Hope you enjoy my channel. Let's look at it one more time. This is a good example right here. Here's your pullback. You started here. We got up in here. Here's your pullback. Now the MA didn't have enough time to reset, but it got here into the pullback. Now we are near VWAP, so that was a low probability trade. I probably wouldn't have taken it because I'm close to VWAP, and you see there's a lot of goofy congestion here, but it did work out in the end because my stop would have been here's my pullback, about 2/3. We did go down to the 50% level. My stop would have been probably here at the takeoff point. So I didn't hit the stop, and then eventually we pulled out. And there's another trade in here which I'll show later in this area here, but that's going to be the last video. There's another trade in here. There's actually a couple trades in here, but there's another one that I didn't mention, but it's a very low probability trade. And then there's one that's okay, but it's not great. It's not as good as the fade or the pullback. So that was it. I hope you enjoyed it. Please like and subscribe, and share with your friends. You can learn how to trade. I try to make it as simple as I can. There is a lot to learn. There is a learning curve, but I cut through all the fluff and all the nonsense and tell you how it works, how everything works.